Greetings, fellow traders. Today I'm going to talk about the Heikin Ashi. Have you ever thought about ignoring the noise, just filtering it all out? Because there's so much that's going on about a stock. So you can use this Heikin Ashi, and it can be used both as a technical indicator for technical analysis, or you can also use it as a chart type. But always remember that this is actually taking into account some averages and some previous bars. I'll show you the calculation later on in the slides. So you need to ensure that you're actually checking the actual price of the stock. So this Heikin Ashi actually means the average bar in Japanese, as you can clearly see there. So what is it? So it's an average bar, and it can be used as a chart type and an indicator. So the traditional candle type shows the current price movement as in now, whereas the Heikin Ashi shows price information from previous candles. So what does it actually help you? So it actually helps you visualize the uptrends. It will give you an indication of, trends, whether it's a downtrend, a reversal is about to occur, and it can actually focus price movements. So you can actually use this when you are trading. But as I said before, you need to be actually checking the price of the actual stock. So it actually smoothes out the directional movement of the stock. You can use it in crypto, you can use it in forex trading and all that, because charts are charts at the end of the day. So it just helps you to filter that noise you see on Twitter and people saying the stock is going to drop, the stock is going to go up, that kind of thing. So how does it get calculated? So the close is actually equal to the open and close and high and the low of the current bar. So it's the open plus close plus high plus low of the current bar, and you divide that by 4. These formulas, to me, to be quite honest, don't really matter to me, but it's just showing you where all these calculations come from and how the other bars are actually found to be put on that Heikin Ashi chart. So the open is actually the open of the previous bar plus the close of the previous bar divided by 2, and the lower of it is the minimum value of the low, close, open of the current period, and the high is actually the maximum value from the high, open or close, or the current bar. So what do these candlesticks of the Heikin Ashi actually show you? So when you see some long green candles, this indicates an uptrend. When you see the red candles, this will indicate a downtrend. So we're going to think again of the bulls and the bears, bearish and bullish. So when you see some long lower shadows, this can indicate, some buying pressure as well. So small candles can indicate some indecision. So for those who haven't actually checked out my other videos on bar charts and open, high, low bars, you can visit that to try and understand some of these things. So if you see some triangle patterns, I did another presentation on these patterns, so you can apply them as well onto this, whether it's ascending, symmetrical, or descending. So what now? So when you're using this Heikin Ashi, make sure at least you add some other indicators that can help you interpret what they mean. But normally the trend is quite clear in your eyes. So you can add the SMA, you can add the relative strength indicator, but in this presentation I'll just add the relative strength indicator. So when the Heikin Ashi changes from red to green, it indicates a buy signal, but just look out for some confirmation as well. When the Heikin Ashi changes from the green to the red, it indicates a sell. So when you see some doji, we talked about doji on the other presentation, so it can actually indicate some trend reversal here. So you still need to look out for those things. So the Heikin Ashi candle with an upper wick in the downtrend actually suggests the downtrend is now losing its momentum or reversing. Remember, it's all about the momentum as well, the price, that sort of thing. And also check what the actual price, I say this before, so you need to be actually checking what the actual price of the stock is before buying, because at times you'll see that on the Heikin Ashi it will be saying maybe it's $5 or so, but then when you look on the actual chart, it's actually maybe $8. So Heikin Ashi is just trying to show you the trend. So when you're using this as well, if you want to put your stop losses in, just make sure you use the actual candlestick charts, because you don't want to do things that will mess up your trading. So as you trade more, the more you'll understand this. So I've said as well about that doji candlestick. I think I repeated myself there. So in the Heikin Ashi candle with a lower wick in the uptrend can suggest that the uptrend momentum is slowing or reversing. So, this Heikin Ashi thing, good thing for looking at trends and seeing where the price is heading, whether it's going down or whether it's going up. But it doesn't show you a couple of things, so you need to be mindful of this as well. It won't show you some of these price gaps, and of course it's not going to show you the actual price at open and close. And always remember, these are averages, as I showed you in that formula over there. So I've just got some examples over here. I think this stock is FMG by the looks of it. So at the top you can see the Heikin Ashi chart, very smooth. You can clearly see that, and you can see the green candles going up, then the red candles come going down. So it's actually showing the trend quite clearly. So you can see it's actually smoother than the candlestick chart, which is our traditional normal chart, which is at the bottom there. So you can see some gaps as well at the bottom there. And it's not actually showing you like the trend because it looks a bit mixed up, if you know what I mean. So just zoom in your eyes and try and compare the two. I'll show you a few more examples here. So I've actually indicated some buy and sell areas there, but here I've also added the RSI. So you can actually see the relative strength indicator there. So you can clearly see when the price is going up, when all those candles are green there, and then when they actually turn, to red. But I'll put just this chart here so you can see that better. So this is actually the Heikin Ashi chart. So clearly with this one you can now clearly see the pattern. You can actually see the green candles right up there and then turns into red there. You can see, so when that green now turns into red, you're going to sell there. And then when that red now turns into green, you're going to buy there. But also be comparing that with your actual price chart. So you can actually look at the RSI and see what the RSI is doing as well there. And when it's above 70, we'll start at the start of that chart. When it crosses up above 70, you can actually see green candles going up. RSI still remains at 70. Then it starts coming down. Then when it crosses the 70 coming down there, you can actually see red candles coming as well. And you can actually use this interpretation right across the chart, because as we go on the other part as well, where I've got the sell at the top, not the first sell, the second sell. If you look at the RSI again, you can see that when the candles were changing from green to red, the RSI was going down as well, and it crossed below 70. And you see how the RSI is fluctuating there. So you can also use that as an indicator to see what's going on there. Let's look at another example. This is ADN chart. This is actually ADN on the ASX. FMG's on the ASX as well. So which one is this one? I've got a PLL. I didn't take the PLL on the ASX. I took the PLL listed in this is on the US market. I can't remember which one though. So you've got PLL there. So you can clearly see what's happening to the RSI. This is actually the Heikin Ashi chart. So you can see when it's turning red there, what's happening to the RSI coming down, and when it starts going up. So look at the 30 mark and the 70 mark. That's what I'm looking at. So where we can see most of those red candles, what month is that? March. Going to the 8th of March there, we can see a big dip there. We can see when the RSI started dipping, going down from 70, going down to below 20 actually. So you can actually see what was happening to the price there, and you can see the trend was going downwards. So you can actually clearly see what's going on there when the trend is going up, when the trend is going down. So the Heikin Ashi just smoothes out, it clears out all that noise. It gives you a clearer picture of what's actually going on, with the price of the stock or the price of, Forex, whatever you're trading. But I'm just focusing on the stock market. And here you can see this is the candlestick pattern of the PLL, the traditional candlestick pattern. You can see it's not smoothed out, but as well, of course, if you're going to use the RSI, you can easily apply it on there as well to tell you what's going on. I'll just show you there. Play with your eyes. See how smooth it is there. Take you back to that one. I'll take you back to that one. You can see the smoothness on this one. and you can see the difference with that one. So this is what I'm just talking about today. So you can use this Heikin Ashi to actually show you the trend of what's happening in the market, but you just need to know what's going on. Are the candles turning red? Are the candles turning green? What am I going to do? Add more indicators. You can add the SMA like I said, and add the RSI. So here is CRO. CRO is a buy now pay later stock on the ASX, so you can see what's happening. This is the traditional candlestick pattern here. You can see the arrows. You can compare that with the RSI at the bottom and see what's going on there. And I will take you to the Heikin Ashi chart. You can see the smoothness there and what's going on. Similar pattern. And you just need to compare the two and know what you're doing. If you're not sure, please don't use this method, because I don't want you to lose your money. So I hope this helps you to actually see the trend and actually block the noise of what's going on around you. So I wish you all the best. And remember, only do what you're comfortable with doing, and don't take this as, trading advice. I'm just trying to help. Thank you. Bye.